Okay, great.
So, I'm going to pass this across Corey,
Okay.
so everyone can hear you, because this is really going to be about what Corey has to say. So, these are Corey's original slides. Now, Corey had a couple of slides that he wanted to add in for us today, but I want to start off with this, and we want to talk about what the market was like when Corey first started trading Bitcoin. So, Corey, take it up and tell people.
Yeah, absolutely. So the whole point of this slide is, to really show how far it's come over the last couple of years. Again, I know that bear run was pretty ugly, pretty scary, but we really didn't come down that far. I mean, when you look back at where it was, where it's been even at, a couple dollars, this thing has got a really strong upward trajectory, and we really just came down and made a much higher low than ever before. And so, back when I was getting in, Bitcoin 600, Ethereum 110, Ripple under a penny, you can really just take a mental picture of those right there. When we go to the next slide, you'll see, you got these new slides. So anyways, the fact of the matter is that we are still way up there. And so people are talking bad about Bitcoin, saying it's dead, saying it's over. It's really just going through what's called a market cycle. And this is the Wall Street cheat sheet. This is probably the best image you can ever, take a picture of, have in your notes. It really just helps you understand why the coins are doing what they're doing, the price action that they're having, and that it really doesn't matter how great the fundamentals of Bitcoin, the technology is. That's not what drives the price of these coins. It has to do with the emotions of a trader, people panic selling, people chasing a coin, that fear of missing out that really takes it to prices that they probably really shouldn't be at. When Bitcoin was $20,000, it was really overvalued at that price at the given time. Not that Bitcoin can't be $50,000, $100,000 a coin, absolutely can, but it's going to take time for that price adoption to happen. And so now when Bitcoin went down to 3,500, it was undervalued, right? And I was here back in February, right? And I was saying, I did not believe Bitcoin was going to go down any further. That I felt like we had found the floor, that I felt like this market cycle was about to start over. And some of the new slides I wanted to show is, how Bitcoin's up about 30-40% in the last month, and now you have other coins like Basic Attention Token, who's also on Coinbase now. It's up 100% in the last month. And so the tide has shifted. The bull run has started. The money is coming back into this market cap. And this next move that's about to happen right here, from 600 to 20,000 that we just experienced that first bull run, we're going to see it go from 3,500 now 5,000 right here to 40, 50 grand maybe this time around.
I just want to touch on this for a second though, Corey, just so that everyone understands this, because I've seen this applied to crypto lots over the last 12, 18 months.
Yep.
This slide's actually an old slide. This graph is actually an old graphic. And it wasn't originally applying to crypto, was it?
Nope.
This is a market cycle. And the important thing as far as I'm concerned is that if new people are looking at this and they want to understand this is predictable.
Absolutely.
This is something that happens to every kind of market that people buy into, because I also saw this applied to the dot-com boom back at the turn of the century.
Yep.
Yeah. So it's something that's been seen and done, and we know that people go through this same process, time in, time out. People first of all get into something a little bit nervous, and then as they come into this, they think it's starting to look good, and people get optimistic about it, and then it goes crazy, and a couple of years ago, we hit that $20,000 price, and everybody thought they were going to be like a billionaire. And you had the story about people that were sort of thinking time to order a Ferrari, this, that, the other, and then it goes wrong. And when it goes wrong, people panic, and they drive that market down. But it's an artificial thing, isn't it?
Yep. I mean, a lot of the market cap that came in when Bitcoin was 20,000, it was an $800 billion market cap. Now it's about 160 billion. That doesn't mean that there's $800 billion in cryptocurrency at the time. It has to do with how many coins that they got on this, in the supply, what the price is at, that gets the market cap. And so again, it was an inflated price. And some of y'all know my story, some don't. But when I bought my XRP Ripple, it was under a penny. And then it went up to 7 cents. I made $100,000 in one day. I mean, it blew my mind, only for it to then come back down a few pennies and me sell some other stuff and go all in. And so I really got to feel every one of these emotions on the way up as I made $1.5 million on my very first big trade. And so after going through those emotions and then seeing it this later, this image came to me later after I'd already gone through that trade and felt all that. Had I known all of it at the time, it just would have made so much more sense. And that's why I want you guys to have this knowledge to where you guys don't have to learn after the fact, right? You guys can have that going into these different moves and into the bull run and really know how to take advantage of this position right here that we'll go to because, as I mentioned, the Lamborghinis and all that kind of stuff with, young guys and girls that were 18, 19, 20 finally came into $1 million. They didn't know what to do with it, right? They didn't even really know how to act. They didn't want to tell anybody. They were scared. I didn't tell anybody. I was nervous because I thought somebody was going to try to rob me or something like that. And so, I tried to talk to my parents. My parents were like, we don't have that kind of money. We don't know what to do with it either. I was like, should I sell it? So anyways, I ended up selling it back into Bitcoin, not back into the dollar, which ended up being a good thing because all that Bitcoin, 750 Bitcoin, went up even more into the dollar. So I guess my point of that is that had I just exited out to the dollar because it was $1 million, I would have left so much money on the table. And so it's one of those things that, we all have these different kind of psychological, amounts in our head. We think, oh, we've become a millionaire now, we've made it. That's just kind of like that first step. I was talking to this guy, one of the leaders' older dads. He's from India, and we were just talking about, how much money he's trying to make, and he goes, how long is a string? I've heard that before. I never heard that before here in the States, but it's like, a string any distance, any length, right? So there's never enough, right? You should never have a cap on how much money you want to make. It's just always trying to make more, compound more, because the more you make, the more you can help people around you, the family, the friends, and then leave that legacy, of course. And so there's a wealth transfer that's happening with cryptocurrency. Again, playing the Forex market, playing that volatility is great. I'm so glad that people are having the results they're having with those trades, but the difference here is the volatility of these huge market cycles. It's not just kind of like choppy like a heart rate. It's more like a mountain that comes as far as the difference in volatility. And I've kind of always said that I feel like cryptocurrency is the stocks and Forex married and had a baby. You hold this coin like it's a stock. You have to sell it. You don't blow your account. You can't be barged and called and pushed out. But, normal stocks, you're happy to get 10, 15, 20% for the year. At least, normal mutual funds and hedge funds in the States. And to be able to take that same type of, again, you own it, but be able to pull 1,000, 2,000%, to me, I've always been like, why would I want to have my money in Forex when I can have it being fully capitalized over here in a kind of more safer, conservative type of environment, but still have that crazy speculative type of gains.
So let's take a look at some of these other slides. So this is what Bitcoin did. We knew that what Bitcoin did. We sort of started off really slowly, took a long time to get moving, then all of a sudden we got this big spike. And we've already talked about this market cycle. That's really good.
my story on Instagram playing?
Okay, so never let it be said that it ain't real. So we have this cycle, and this cycle is predictable. And you use the Elliott wave graph above. Do you want to tell people what that Elliott wave is all about?
Yeah, absolutely. So the first thing to understand is that even in a market cycle, things don't just go straight up, right? There's waves within waves, as I say. That's kind of what you're seeing right here. This is an Elliott wave within a big Elliott wave. And so the market cycle is within 5 waves, 2 of those waves being down waves. And so if you've ever seen one of my Crypto 1 alerts, I'm trying to help you all call the market cycle. So I put out an entry, which is that buy zone, and then I put out 3 take profits. And so I'm trying to call the top of those 3 waves. And recently, in the last couple of trades, the companies want me to even call the re-entries. So I'm actually putting out every trade on the way up. I'm telling you to buy here, take profit, let's re-enter right here, let's take profit. Because the whole point is you're trying to pull out as much as you can from each move. And yes, you could buy it here and hold it all the way through. You could have bought it, whatever that price was, couple hundred bucks, and hold it 20 grand. Or you could have played all the volatility in between that. And so you do see another wave right here. 1, 2, 3, 4, 5. This 5th wave, this is not a very good representation of the Elliott because the 5th wave is actually the grand wave and the biggest wave. So these first couple ones are kind of ramp up. And one thing I want to mention here is that if you were to take this, this is the lifespan of the whole Bitcoin, and you were to focus this in right here, this right here was a market cycle that looks exactly like this right here. And if you were to zoom in, this thing came down almost 80-90%, just like this. It was like from from a few dollars to about $1,200, and then back down to 100, 200 bucks. And so if you had gotten Bitcoin back here, you thought it was kind of going down. You thought it was over, right? Only for that move to just be a small blip on what came a couple years later after a bear run and a new market cycle. So again, to put that into perspective, when we have a new market cycle and we go up to new price points and new highs, this right here is going to look like this right here, and you won't even be able to see this anymore. It's just going to be like a straight line. And so that's how you can predict this. Again, when I got my finance degree, they said the past does not reflect the future. That was a lie. I mean, that's why it's in the textbooks. That's why there's 20 additions to the textbook, right? They're constantly having to update what they said before, retracting statements. I mean, you can trade off the past. These take profits I get, it's from price history. And I've seen where we had a resistance once before. Well, we had resistance here again at that same price point. And so, if you can start to really understand those kind of theories and also ignore some other stuff, that's when you can really be successful. And I think that's another reason why I'm such a great crypto trader, is because I never really trade Forex. And you can kind of think Forex and try to, correlate that stuff over to crypto, and you'll get caught holding the bag and, maybe lose some money on trading. So I kind of say if you can trade crypto, you can trade Forex, because it's like that crazy beast, right? But it's just not, you can't do it the other way around.
Yeah. But just so everyone gets that picture in your mind about predictability, if you'd applied that same graph to Amazon, you'd see the same thing. If you applied that same graph to Apple, you'd have seen the same thing. But what happened is these companies came up, went up, spiked, came down, everyone said it's all over. They're now the most powerful companies on the planet. And we're essentially saying that predictably we know that Bitcoin is going to do something similar to that right now for us. So we talked about Bitcoin. The same thing applied to Ethereum. I'm not going to repeat that because otherwise we're just going through the same stories. This one is a little bit more interesting though, because you're telling everybody that what we should be doing is trading Bitcoin to increase that Bitcoin holding rather than increasing the dollar.
Yep. So the best analogy on that is, again, when I made that first 1.5 million on Ripple from going to a penny to 45 cents, like I said, I could have just accepted the $1.5 million. But instead I sold it back into Bitcoin, which was 750 Bitcoin, because Bitcoin was only $1,000, $1,200 bucks at the time. And so then when that same Bitcoin then went up to 20,000, there was a compound effect there that was much different than just 1.5 million. It's really like I made 15 million on the same trade, right? Just going back into an asset or commodity that's going up in value versus selling it back into a dollar, which, as we all know, is not very good. Man, I went and got $100 to put into British pounds. I got 58 British pounds. I mean, like, why would I ever want to have the U.S. dollar? I mean, it's so bad, So that's kind of been my thinking. Is I have a fully adopted cryptocurrency in Bitcoin. When I get paid in different things, when I get done paying my bills, I'm throwing all the money into Bitcoin cryptocurrency constantly, all through the bear run, buying the dip, increasing my positions, accumulating more coin, and that's what you're supposed to do when things are going down. You buy the fear and you accumulate as much as you can, because when it starts to go up, you kind of just want to be in for the ride. You don't want to be buying things when they're up there. That's when you're selling. That's when you're going to the stores and actually realizing your gains and buying the nice thing that you want to buy. And so it's one of those things that I don't think I'll ever make the full exit, out of crypto, because I believe where it's going. It's just one of those things that you don't want to always just buy things, buy coin, right? Eventually you need to realize it, right? Have the home and have the quality of life that comes with your efforts of being a great trader and that. But again, I just will never see myself making the exit. And like right now I have like $34 million in coin right now. And I mean, why would I do that? Why would I sell that back in the US dollar and the US dollar go away and I'm sitting on $34 million and nothing, right? And so it's a very speculative way of thinking, right? And so for the people who are not quite there yet, the best thing I can do is tell you to hedge, right? If you believe that in straight British pound, straight euro, straight US dollar, well, what if Bitcoin is the future, right? Well, right now we have 100,000 pound British net worth, right now at 5,000 you can buy 20 coins, right? Well, let's say you don't adopt it, and eventually the British pound is 100,000 per coin, right? Because it's not just about more money coming into the coin, it's about the inflation of the dollar and British pound and euro. That's how they get those prices. So you didn't jump on board before, 5 years go down, British pound, US dollars are going away, and you have to put it in Bitcoin. Well, now you're only going to buy one Bitcoin with your 100 grand. We could have bought 20 before and have $2 million instead of 100 grand. And so that's the other side of it, right? That's the other end of the spectrum. So Rockefeller, big name again, if they're the biggest money family in the world, don't you think they've hedged themselves to add some Bitcoin? They're not going to just become the poorest family in the world just because they didn't see that foresight, right? So if they're doing it, we want to be doing it. That wealthy 1%, right, of the world, we have to be hedging ourselves and thinking the way they are. And if this is the future, well, I got to have my couple of my raffle tickets in the hat, just in case. So that's a great way to look at it. But so let's talk about this now. So the orange line is the Bitcoin price. The green line is the US dollar price. And so the best thing that you can be understanding here is that you can actually be making more US dollars or British pounds and be losing Bitcoin, which is not what we're trying to achieve right here, right? We want to keep making more Bitcoin, and eventually that Euro, USD, British pound will get that value back. So Ethereum, okay, if you would have bought your Bitcoin with Ethereum up here, this was about 1,400, and I think it was about 0.03 or something, or sorry, it was like 0.14 Satoshi, which means that one Ethereum equaled 14% of a Bitcoin. Down here it's 0.03. So you would have lost a whole bunch of Bitcoin by being an Ethereum instead of Bitcoin when Bitcoin was going on the rage to 20,000. So a couple of things that you can take from this. There's a time to be in alternative coins, and there's a time to be in Bitcoin riding that against the fiat. And there's only a couple months where you can make money in altcoins, and then the rest of the time they're retracing against Bitcoin. So it's one of those things you strike while the iron's hot, okay? And so the other side is like just in this last month when Bitcoin went up 40%, well, if XRP Ripple only went up 20%, well, you lost 20% of your Bitcoin even though you made 20% of your British pound. So the cool thing about this is that in a bull run, even if you're losing Bitcoin, you're still going to be making more dollars. And if you're doing it right, well, you're making more Bitcoin and more dollars. It's kind of a win-win situation, really. One way you're not making any money is if you're backing just British pound or USD and not the coins at all. I mean, they're all going up in their market cap. They're all increasing from month to month, and it's just because that tide shifted. So my main thing is I don't really care about the dollars we talked about. I'm kind of playing the orange line, and we kind of ignore the green line. And see, if you don't know you're doing that, you could be thinking you're making more money, but you're actually losing Bitcoin. And so once that light bulb goes off and you stop caring about that, then you can get the compound effect that we talk about.
I think the one thing that we really have to stress with this is that what we're really playing is a medium to long-term game, isn't it?
Yep.
This isn't about making money next week. It's not about making money next month. This is 3 to 5 years down the line and changing your life completely.
Absolutely. And so I guess it's on that too, day trading, we talked about, being on vacation, popping in those trades. Well, I went on vacation too to Breckenridge, went snow skiing in Colorado for 9 days, and I didn't have to look at my charts at all because I know I'm not a day trader. I know that it's going to be a week or two before these things actually get impulsive. I literally came back to Texas the next day, one of the coins popped off, and I made like 50 Bitcoin. So it's like one of those things that quality of life. I'm out with friends who aren't in network marketing, aren't entrepreneurs, right? The 8 to 5, where they turn off, right, when they go on vacation right at the end of the day. And I used to be the guy who was always on my phone. No one would invite me anywhere, right? I'm sure you guys are all entrepreneurs, so you know how that is. They're like, Corey, can you just get off the phone and live in the moment a little bit, with us? And so, finally, I do that now versus those 4 or 5 years of just battling the Zoom calls all the time and, having to be married to my phone. The quality of life, I cannot stress enough. Again, only being 28, and so having my whole life ahead of me, to really be able to, I picked up golf. I'm golfing once a week. Like I see these guys out there, they're retired. Like, why is this kid out here in the middle of the day playing golf with us. You know, it's just like I'm finally just like kind of taking in all that I've been able to do and accomplish, and really again passing that baton, and showing people how they can have that, and that they don't have to be 50, 60 to be able to go and play golf once a week or every day if they want to do that. It's like you have to sort of start to figure out, what are my hobbies going to be, right? Those are good problems to have, right? When you don't have to pay for bills or worry about this and that, you really can. Man, I got to get my personal life going. Where's this lady at? These different kind of things. And so I say that because I know, again, we're always talking about the money, the percentage gains, and this and that, but it's way more to it than that. And I'm glad I'm able to figure that out, before I get to 30s and 40s. So with that being said, I know I kind of rambled a little bit, but I think it's just really important to understand that side of it, because I think that's part of it that gets lost and scraped under the rug, if you will, while you're just trying to get these gains.
Okay. So I'm just going to flip through a couple of those, because a couple of those slides just basically repeated the same concept but with different points. So they're not the most essential parts of it.
But what I want to say that is that the reason why they're on there is because I want you to see it happens across all the markets and coins. I mean, it's one thing if it just happens to one market. It's real if it happens on every single market, right?
And one thing that I will say, this is a lot, particularly for you new guys, but a lot for you to take in one day.
Yeah, it is.
We do this on a regular basis. Every second week on Tuesday, Corey does a presentation that's live on your computer. You can watch it from the comfort of your own home, and we have the same discussion. And in a bit more detail than we're going to cover today.
Yeah.
Well, so we can actually get that. In fact, we did a call a couple of days ago that is up on YouTube. So again, people can look at it and you can get all of this detail. So just very quickly tell people, this always fascinates me when I hear you talking about the Fibonacci retracement, because it fascinates me that a 12th century Italian mathematician gets dragged into cryptocurrency.
Yes. Yeah, so look at this, this is one of the indicators that I trade off of. I trade off about 4 or 5. I mean, there's kind of 50, 100 that you can trade off of on TradingView, and so I like to really focus on a few ones that I know are kind of on point, because I feel like you can get kind of lost with all the other stuff and have way too much in your chart, and some people are looking at it, they don't even know what's going on with it. And so I try to be really traditional and standard on it. But so Fibonacci, these percentages right here, it's amazing how they correlate over and over again. So part crypto coach, I teach how to use indicators, but with Fibonacci, the way it works is you start it, like you click here from the breakout point, you drag it to the top of the move, including the wick, which is still price action. So then it puts out these invisible lines on your chart. So again, you now see things that no one else sees, right? And if they don't know Fibonacci, they're just a black chart. Well, if you see this thing really kind of tags off these different Fibonacci lines, almost kind of like a pinball machine, right? And so if you know that coins like to retrace 786%, well, you can go out on here and let's say this hadn't happened yet, you can see what price point is at that retracement, right? And again, it's not like, these are pretty precise, 61.8%, it's not 62%, not 61%, very, very precise. And so if you know how to really, again, I say that the analysis is only as good as the analyst, right? If you were to draw this right here, you're going to have different lines in different places, right? So it's really about drawing the way it needs to be for you to get the right entry. But if you don't know Fibonacci, you're going to get caught holding a bag and being down 20, 40, 50% on an entry before it breaks out, versus being able to get kind of right in there at that support, at that floor. And so this is a big one right here, and why my entries have been so spot on is because of this indicator right here.
I wanted people to see this, and I wanted to hear what Corey said there for a really good reason. And the reason is I want you to understand that there is some serious mathematics that goes behind these trades that you get, but none of you need to know this. Because with Crypto 1, all that happens is Corey does the work. Corey does all of this figuring out for us. He works out which currency pair he's going to work on. He tells us where he thinks this is going to go. He then sends us 3 figures. You saw the slide that Simon put up earlier that just showed a little graph, and it says 3 numbers that come through. Corey's going to tell us what profit one is, and tells us when it's going to come out. So when we buy into it, he tells us what price we should buy in at. He then tells us when we should sell. He then tells us when we should buy back in again, and what price we should be buying back in at, and then when we should sell it again to take profit, and then for the third take profit too. That work gets done for you. You don't have to understand any of this stuff. It's interesting to know that there is some very, very serious stuff behind it, but how many people in this room, A, understand it, or B, really, how many people want to learn to understand it? If you do, if you do want to learn how to understand it, Corey has another product that we'll touch on later, but the reality of it is for Crypto One, you don't have to know. All that you need to know is the working out is done for you, the trades that come through, give us the profit that we need, and in simple terms, 1900% growth in the last 12 months. That's really the most important thing to take away from that.
I think we want to talk about this a little bit. I know this is kind of an interview, but I think it's important. So the one thing I want to say about this, guys, and we'll go through it quickly. So this is a buy and sell order for Polynex, okay? And you see these really big green candlesticks, these really big red candlesticks. Again, when Bitcoin dropped from 20,000 back down to like 12,000, then up to 16 and back down. Some people think, oh, everyone's selling or all people are buying. There's market makers and there's these people that they call whales. Okay, they're the ones that are really driving the different shifts of momentum. Okay, and so this is an account where I have like 4.8 or 8. I can't remember what it's. I think it's 4.8 million digibyte. Okay, digibyte is just an alternative coin, top 50 coin, kind of like a penny stock again of the Bitcoin. And so if you look at these orders right here, this says like 275 or 375 Satoshis, I think it's the 375. So again, the Satoshi is the price of the Bitcoin. It's like the USD, but this one says Satoshi. And so if someone wants to buy this, right, there's only like 285 that's willing to be bought at 374. So again, just because I have 4.8 million digibyte and I want to sell it all right now, there has to be someone who wants to buy it, right? There has to be a market for that, okay? A lot of people think that they can just sell it to thin air. It's not like that. There's these order books of waiting for people to buy or sell. So all of these right here together only equal about 7 Bitcoin. Okay, I put 40 Bitcoin into this trade back in the day, okay? Which means that even if I sold through all these orders, I'd still have more digibyte, okay? Well, if I want to sell it and I click right here, I think it was like 200 or 300, 200, like 40. Fact of the matter is it drops like 30, 40 Satoshis just by me, one person selling this. Okay, this is because of lack of liquidity, right? Remember, just because a Bitcoin was bought at $20,000 a coin doesn't mean 100 million was bought at 20,000, right? A fraction of a Bitcoin could have been bought at that price and it becomes that price. So when you have people who want to sell $1 million worth of Bitcoin up that high, you're going to see that kind of dump and that sell-off. And so that's important to know that there is manipulation that goes on with the order books because they're thin, and we play against that manipulation. We play against that volatility, and you play with the whales. I talk about the bulls make money, the bears make money, bulls push it up, bears short it down, pigs get slaughtered, right? The pigs are people who do not know what they're doing, they're just chasing it around. We're playing against these books. I can see orders, right? I can see where the big money's coming at. They're called sell wall, buy walls. Again, you don't even know much about that, just know that I do. But there's a lot that goes on to this price fluctuation, and we play that in. And again, if you can understand this right here, then you can understand why Bitcoin goes up from $4,000 to $5,500 in a few weeks. It's because a big player just took a big position. They just put $100 million into this coin, and by the time they got their whole $100 million in, this is now where the price is at. So again, that's really, really kind of more advanced, but it will help you understand why things are happening and also make you feel better when it does. Just because Bitcoin came from 20,000 to 3,000 doesn't mean everyone and their mom and dad was selling the coin, right? There were a few big players that took position, that then took profit, drove it back down to where they can now buy it even more, even cheaper, right? And so, again, if you understand that, it makes you feel better to buy the coin at 3,000, 5,000. You don't feel like it's tanking. It's just, man, I'm getting it way cheaper than I would have gotten a year ago when other people bought the coin.
And I mean, the one thing, part of when Corey starts talking about a lot of this stuff, you've got bulls, bears, pigs. It's a cross between a zoo and a farm somewhere. I'm not sure, but it's a little bit of a different language. But the reality of it is, We don't have to know that immediately. The information is there. We have a huge amount of education for you to learn. There's a ton of stuff that you can learn as and when you want. This is really talking, in simple terms, this is just supply and demand, isn't it?
Absolutely. I'm glad you're up here, Roger, but we need someone to really bring it down. You just summed up my whole thing is, yes.
But that's what we need to do, because, I mean, for me, I have a thing about just keeping things in plain English.
Yep.
And supply and demand is a huge thing. And I kind of relate an awful lot of this stuff back to my old industry. I used to sell cars for a living.
Yep.
And when I sell cars for a living, there's a huge array of cars that you can sell. And I can make money, go out, and I can make money selling Renault, and I can make money selling Citroën, but I can also make more money selling BMW and Audi. And what Corey is talking about is picking the right product that can make the maximum profit for us, and it comes down to supply and demand. And liquidity is down to a question of just how many people actually want to buy that product. More people want to buy the Audi, but they can't actually afford it, so they end up buying the Citroën. We need to know where we're up to with this, and this is really what that's teaching us, so that we're getting into that. This is really, really important to us, because when we're talking about a trading strategy, it is important that you have a plan in mind for what you're going to do with your money. And Corey gives us here two strategies. One is a conservative strategy. If you're coming into this for the first time and you're a little bit uncertain, then we're going to talk about how you can buy into one or two coins and hedge your bets, or a more aggressive strategy. If you've maybe got a little bit more money, maybe you're a little bit more of a gambler. And Corey's example is fabulous, because he talks about the old men like me. I know people like him. So Corey, cover you up.
Yes. Well, so I think we have a little bit different opinion on risk, right? So I think even if you are a new person coming on this, it's more about your age, how many kids you got, and where you're going for retirement that determines if you are going to be aggressive or conservative. You know, if you're in your mid-30s, no kids, I mean, that's the most aggressive time you should ever be in your life, right? As you start to get closer to that retirement age and you got families, bills, other kind of obligations, now you start to have to think about the hedging of the risk, and because you have less time, right, to make it back up if you lose it. My dad was born 58, my mom was born 60. You know, they're trying to retire here pretty soon. You know, they're in their 60s. My dad wished he would have been retired maybe 5 or 10 years ago, right? So he can't really, in his mind, afford to lose anything, right? Because every time he loses something, that's an extra year or two, whatever, that he has to work, right? So that's kind of how I would try to think about where you're at on here as far as your risk taking. But so with that being said, you know, when I came in this thing, I was aggressive. I went all in on Ripple, and I made a lot of money doing that. And that's kind of why this is kind of based off of me. And so if you have $0 to $500, you know, one coin, if you double that up, yeah, it can be in 2 coins. Again, here 3 to 4. So the whole point of this is even if you have $1 million plus, 10, 12 coins is the most you ever need to be in. There is such thing as being too diversified in the market, right? You still have your eggs in different baskets, you know. You can have some more speculative coins with some more larger cap coins like Ethereum or Bitcoin. But the main thing is that if you have 20 trades, you can't keep up with that many trades. Really, you know, you don't know if you're up, down, on one or the other. And it's better to increase position with coins that you know are going to do the analysis, right? There's a lot of coins out there. Some of them are not any good, okay? And some of them are not going to be around in a year or two, right? And so it's easy to buy the fear and buy the bottom of that market on a coin that you know is fundamentally strong and going to be around, versus buying the fear in one that is just tanking and it's not going to be around. There is a difference there, you know. And so the other thing here is eventually you want to take out some Bitcoin and hedge it to just against the dollar. If your Bitcoin's in altcoin, you have the potential to lose that Bitcoin. So if you start with 1 and now you have 200, take 100 of that Bitcoin off, leave that to play against the dollar, and then risk the other 100. And so that's what this percentage stuff means down here. And so you guys can all have that chart, and just kind of wanted to help understand the chart.
Yeah, and if anybody needs that, just let us know. That's available for you as a slide to take away. We've got a couple of trades on here, and I don't want to go into every single trade, but do you want to tell people when you send these out, what you're actually telling people when they come out? And is this the right one to show?
Yeah, that's a great one. This is actually a perfect one. So, again, my charts are always the same, okay, and it's really easy for you guys to understand that the buy zone is always yellow box, and the take profits are always a teal line, okay? the reason why we talk about those order books and why I want to talk about that slide is for right here. You see I put out this buy zone, Ethereum versus Classic versus Bitcoin, and this thing just dumped down a big old red candlestick. So I'm telling you, that was one or two people who just sold this thing down, shook out people who had a 10-15% stop loss. Now they're out of the coin. They're back in Bitcoin. So they bought it here. This was in 3 days. So they bought it. A day later, it gets dumped down. They're pushed out of Bitcoin. They wake up the next day. It's up 22%. I might take profit. They're like, oh, excited. But they're not in the coin, right? Because they had that stop loss. So this is why I say don't use stop losses ever. Because this thing got listed on Coinbase. Y'all have heard of Coinbase. So I called. I said, hey, buy Ethereum Classic. Looked good from a technical analysis standpoint. Did not know it was going to be listed on Coinbase. But the news of that pushes the target. So again, there was someone also that knew that, and they dumped it down before they pumped it up. And so that's how the manipulation is there. This is why you do not use stop losses. And this is why it's important to take profit. And I might take profit because literally I put this out a couple days ago. It hit my take profit perfectly and then started to come down. And so the reason for that is because, again, there was a reason for that take profit. There was resistance from prior time. And so we were probably going to see resistance there again. And sure enough, that's why it went the way it did.
And what I do, there's two things that I want to touch on there, first of all. One of it's going to go back to something you said before. The first thing I want to touch on is you said, we never place a stop loss on crypto.
Yep.
And one of the reasons we never place a stop loss on crypto is, unlike trading Forex, you're actually buying an asset with this. You're not just trading against it, you own that asset. Yeah?
Yep,
so it's just like buying shares in a company.
Right.
And if you buy shares in Apple, and Apple has a bad day and the price bombs, how much money do you lose? Well, you don't lose a penny until the day that you sell. So if you buy into Ethereum here and the price plummets, as long as you hold on to it, if you didn't have that stop loss, as long as you hold on to it, it doesn't make any difference. Until you wait until the price comes back up and you sell and you hit profit points. So it's really important that we understand that with crypto you never place that stop loss. But I'm also going to talk a little bit later about Forex, and it's hugely important that you do put that stop loss in. Massively important.
Yep.
So we need to know the difference between the two. And you need to know why you're getting what sounds like conflicting advice, but it's because you're talking about two completely different markets.
Yep.
Okay, so
this is that same point, yeah. So again, remember those three take profits. Said to buy here, we talked about how it dumped. The first take profit literally hit it right on the dot, and then did that Fibonacci retracement. So you could have got 20%, whatever, made more coin, buying it lower, and then it went to my next take profit for another 35%. So you could have just sat here through the whole thing, made 35%, or made about 50%, 40% by playing the moves for what they are.
And really what we're saying here is that if you bought down here and you bought for, I'm going to put simple numbers in, you bought for $10 here, and it then went up to $100 and you sell it back again, so you now got $100. Then the price comes down to, say, 50 or 60. So you can buy more. If you'd held onto it there and it fallen, you can now come back in. You can buy a lot more than you bought here.
Increasing your coin position.
And we have a very simple mathematical equation why we can do it 2 or 3 times to make maximum profit on it.
So the reason, okay, so this is a buy zone. So we talked about the take profits before. So again, I put up this entry, I put up 3 take profits. It's based off of Fibonacci. Telling hey, buy between these 2 zones. Go to the next slide. So if you see, all this did is go down to this Fibonacci line. Okay, so that was a deeper retracement, but still followed Fibonacci, right? And so the best thing about here is, again, if I put out an entry, you need to be confident as I'm confident with the entry there. And if it just goes down a little bit more, then you have an opportunity to buy it cheaper in what we call average down. You bought some at 100, you bought some at 50. Well, now the average of your coin is 75, right? So now you're even better as this thing's going up, and even at 100, you would have been broken even had you not bought more, or now you're already in profit on that second trade. And so averaging now is like literally the best thing. If someone's in a trade that's down from a year ago, I would always tell you to increase your position on that coin, if that's these cheaper prices, than to just buy another new coin and then have a new position. And so with that being said, this thing went down 10%, only to go up 70%. Okay, and so it's okay to be at a 10-15% unrealized loss to get a 70% realized gain. I'm sorry. And so that's the whole thing, is that I'm doing the best I can to call these retracements in that floor, but sometimes, again, that manipulation will drop it down a little bit more. It's such a quick sell-off. I mean, this thing right here could have only been for an hour, and it was about right back up. So you can't be too caught up with it going down, because it's not like it stays down there very long. So.
But again, two things. You get all this, when your trades come through, when you actually join up with the company and you get these signals coming through on your phone, this information appears there for you. But it is really just for information. As Corey explained what he's doing. Yeah. You're not doing this work.
I'm glad I said. So again, it really is. I'm about education. I think it's so important to learn. I mean, to know why you're doing what you're doing, especially when you're talking about the kind of money that I want you guys to be trading with. I'm not wanting you guys to just throw 500,000 pounds on this, right? I want people who have 100,000 pounds sitting in the bank doing nothing to feel comfortable putting half of that into this point. That's why I'm giving you the education, because no one's going to do that with just copy and paste stuff, right? You need to know why we're doing this to really be able to take advantage of what's about to happen. Because when this bull run happens, it's going to happen pretty quick. And you're going to just wish that you had put more in before. Because again, it's all about percentages. You know, you can make 1,000% on a dollar and have $1,000, or you can put 20 grand in and have a couple million bucks. So it's a few of these bull runs are going to happen on Bitcoin, and then there's going to be mass adoption, and you're going to find stability in this price of Bitcoin. So these are the days to be able to make the money and the wealth transfer, to have a bunch of new money, right? Not the old money inheritance, new millionaires with new money from nothing.
Absolutely. And as I said, Corey sends the information out for us to learn, but we've got a two-stage thing, because you can trade confidently without knowing in the beginning,
Yep.
and you can learn as you're going along once you're profiting from learning from it.
Yep. So we can start to move quick. I mean, so this is just another one again of a coin that had hit the floor, and I had a new trend that was coming. I said buy it here. It immediately left the buy zone for like 80%. So the one thing I'll say on here is don't sleep on my entries. Everyone's like, Corey, I wish we had more trades for Caveira. I wish we had one every single day. I could put out 30 entries, right? You're not gonna be able to take them all anyways, right? And so the whole thing I'm about is striking while they aren't hot, buying the coin that we know is gonna make the move. Be patient for when it does, and then find the one that hasn't broken down yet and swing it over. Constantly swinging, but I'm not a forex trader. There's not going to be 5 trades a week, right? This is more like a stock trading, right? But it's just more trades in stock. But it's just so there's expectations that need to be set, and we'll talk about how even though there wasn't a new alert this week, there might be plenty of coins that I've already put out that are still good entries that you guys can take advantage of, and so. That's a leader thing, but I just want y'all to know that, whenever I do put it on entry, it might not be today, it might not be tomorrow, but when it comes out, we want to go and get that order in, you know what I'm saying? Because it could leave immediately, and especially with 20,000 people now getting the alerts, right? You're trying to get your order in line before other people are putting their orders in, so one thing I want to say on that.
So, we need to sort of...
Yeah, well, I'm sorry, man. It's just so much information.
I know, I appreciate that.
Yeah.
And we're trying to do a lot. Let's very quickly touch on exchanges.
Yeah.
Because it's important to know, as far as exchanges are concerned, that Caveira does not recommend any one given exchange, because that's not what Caveira does. It's a compliance issue. We don't do that. We were talking about, the other day we were talking about your favorite exchanges, and one of these isn't your favorite anymore.
Yeah. So BitChex and Poloniex are USA based. Because of that, they got the SEC, different regulators that are really on them. Okay, and they got to kind of be on more on their P's and Q's, right? Binance is the largest exchange. It was an Asian one. Now it's like Malta. They kind of went cryptocurrency friendly. Anyways, Binance delisted a coin called Bitcoin SV. Social version. It was a fork of the two ABC the cashes. Bitcoin Cash, ABC and SV, and I took a really good profit on ABC, and I swung it over to SV because it hadn't broken out yet, right? And then Binance delisted the coin over some drama between a guy who says he's this Satoshi Nakamoto, whatever, it doesn't matter. This is the kind of stuff that puts a bad taste in my mouth because it's supposed to be decentralized, and that was a centralized move that this guy did. He was able to dump SV and pump ABC all over some news and fear. The guy made a lot of money, and I did lose a lot. I had like $40 million in SV because I was increasing my position, on this deal, and so it's one of those things that there is a lot of manipulation. I will say it again, and it's one of those things that sometimes it plays in your favor, sometimes it doesn't, right? And as you start to really increase your portfolio amount, so I got $34 million, right? $250,000 in a coin is not a whole lot, but it still sucks when you lose 20% of that much money. You know what I'm saying? So I say it because there is risk here. You can lose money. We talk about my perfect record on these trades and doing all well, but there is going to be exposure there to eventually things that are not foreseeable. This was nothing technically done. This was just straight drama between exchanges, news that he literally could just put out. The one thing I'll say here, I know I'm rambling, but it's so important for you guys to know. So when Bitcoin went up to 20,000, it was coming down. There's a downtrend, okay, that you can, same way it's an upward trend. Every single time that this was about to break the downtrend, the news came out with some type of bad article. China bans mining, which, as y'all know, you can now mine in China now, right? These different kind of things. It wasn't just manipulation; it was price suppression as they brought this thing back down. And so, if you know these kind of things, if you can see these things, if you can make these types of analysis on these different kind of trends, you can really kind of block out some of the noise that's just going to make you drive yourself crazy as you're trading this coin.
Okay.
Yeah, so I'll keep going. So Google authentication, it's really important to have this on your exchanges. Again, I'll bring up China because they're kind of the ones like that kid at your school who ruins it for everybody else. It's kind of China a lot of times. So they're the hackers, right? They like to hack people's accounts. And if you have your username and your password somewhere on an email, they're probably going to find it. And they'll be able to log into your account, right? And so if you have this app downloaded on your phone, these 6 digits change like every 15 seconds. And so even if they have your username and password, they have to have the 6-digit code, which pretty much means they have to have your cell phone. And so if you do not have Google authentication on your account, you're pretty much setting yourself up to be hacked. And if you have this secondary security on there, it's impossible for them to hack your account. So simple download, simple go in your settings and add it, and it's a must as soon as you create a new account on the move.
And it is, I've set that up. That really is a quick setup, so no problem with that.
So cold storage. So this is now protecting us from the exchanges. Okay, Mt. Gox was an exchange back in the day. A lot of people had a lot of Bitcoin on it. It went away. Years later, these people are still trying to get their coin back. Okay, and so when your money is on an exchange, they hold your private keys. I know it's new terminology, but it's pretty much like the footprint of the Bitcoin, right? And so unless you move it to cold storage, then you own the private keys. And so I pretty much say you only want to have on the exchange, which is readily tradable, right? Because if I'm in the UK and Digibyte breaks off for 80% gain, and all my Digibytes on cold storage back in Texas, can't really do anything on the trade, right? So if you're planning on holding a coin for a long time, it needs to be on cold storage. Otherwise, you want to be able to log in and trade it immediately. There's a show called Billions. It's on Showtime, I think, and it's a hedge fund, traditional kind of investing. But in season 2, 3, they start talking about Bitcoin, and this guy is literally giving people $1 million bonuses in cold storage. It's like literally giving someone $1 million in an offshore bank account, like Cayman Islands back in the day. So if you ever want an offshore bank account, cryptocurrency just made it that much easier for you to hide all your money. And I say that with the most legal way because, again, it's important to be able to protect your money, right? A lot of banks do things wrong with their money, and this is your best way to have it all yourself. And this is kind of what it looks like. So cold storage, you put the device into your computer, it has a wallet address just like the exchange, and just like you would move Coinbase, to Polynex to trade, you can take it off the exchange, put it in cold storage, and then, no one can take your coin.
Okay. Right, so I love this bit, so I think these are going to come. I just love this bit, so go for it.
Okay, so buy the fear, sell the greed. They call it fear, uncertainty, and doubt, the FUD, right? That's the other side of it versus the FOMO is that fear of missing out. And so I'm really big on buying the fear. I like to buy a coin that's super red, really ugly, because I know there's always a reaction to that sell-off, right? There's always going to be the people that start to buy it back up. Sell the news. This is really important because whenever I was in, Ripple, it was up at like 45 cents or so. I sold it back in Bitcoin because I had $1 million. Did not understand the Wall Street cheat sheet, none of that stuff yet. I just made that $1 million, and I kind of told myself when I made $1 million, I was going to sell it. Plus, I had a bunch of people telling me, Corey, sell that Ripple, okay? And so I did, only for it to go back down to about 15, 20 cents. And everyone was saying it was going to go to $1. That's why I had 3 million coins to begin with, because I originally had 1 million, and I increased it to 3 million, so I was like, well, now it has to go to 33 cents, and I'll make $1 million, versus everyone was chasing it to $1. Then you go to Bitcoin. When Bitcoin was finally at 15,000, 18,000, it was finally on the news every single day, okay? Everyone was saying it was going to 40,000, 50,000. It didn't. It started to go down pretty much immediately when it went on the news. Take away from this, you're not going to get rich by watching something on the news. You know what I'm saying? If when it's on the news, it's already too late, kind of though, right? Well, guess what? Bitcoin hasn't been talked about on the news for like a year now, right? It's no one's talking about it anymore. It's forgotten. Now is the time to buy it, right? So, sell the news. As soon as someone's talking about a coin on the news, it's time to get out of that coin because, again, you needed to take position in it before anyone was looking at it. Bulls make money, bears make money, pigs and slaughter. I talked about it before, margin trading, there are people who short the market. There are people who make a lot of money on a coin going down. It's just they were the ones that knew it was going to go down. So if you know things are going up, you can make money on the way up. If you know it's going down, you can make money on going down. You have to know what you're doing, though. There's always money being made, but if you don't know what you're doing, you literally are running around with a chicken with your head cut off, and you're going to be losing 5% here, 4% here, 10% there, and you're going to slowly drain your account. So I talked about, don't get caught with FOMO. If a coin is pumped up big green, right, the rookie trader wants to buy that because they're chasing it. You have to accept that you missed it. You missed that pump. And there's going to be a pullback. So if you buy it and chase it, you're just going to get caught with a 10-15% down immediately. Don't let the FUD get to you. If you're in a coin and it's going down and everyone's freaking out, you're not going to freak out. You know better, right? You know you're just at the bottom of the market cycle. Things are going to turn around, things go back up. Do not panic yourself. Never use a stop loss. I used stop loss one time, very, very early on. It was the dumbest thing I ever did because, again, 15-20% on a coin is nothing in cryptocurrency. Now, when we're talking about a coin going up 40-50% one day and then another 50% the next day, part of the reason I have 33 million coin, I just got 50 million of coin under a penny, and it's at like 68 cents right now. You know what I'm saying? It's a 10,000% gain in a month or something like that, right? When you start thinking about those type of percentages, it just puts the old traditional type of stuff kind of in that bay, and you cannot get excited about an old way of thinking when the new way of thinking brings different percentages.
Okay. So we've already talked about cold storage, and we talked about the fact that you should really keep, particularly when you've got a large account and you've got a lot of money in it, if you're going to hold money for a long period of time, keep that in cold storage, and we're just covering what cold storage is. Yeah? Yep. So that's really good.
Yeah, and so I guess that too, it's not about how much money you have, really. I have over $1 million in different exchanges, so don't just think because, I have this much money, like I have to get it off the exchange. Like, if you have $1 million in trade, it still needs to be on the exchange to trade it, you know what I'm saying? It's not like you need to leverage what you have. Just be careful with it. And don't be afraid to take it off and put it in cold storage. It's kind of the main takeaway on that. But don't be afraid to have too much money to where you're not trading. That's not what you want to do either. Trust your target, see profit while it's there. I say it takes the stairs up and the elevator back down. Okay? You need to sell into strength. If you bought a coin at $1,000 and you made $100,000 on the coin and you don't sell because you're being greedy, and there are a lot of people who want to buy it up there where you could have sold it and had liquidity, and then you wait, and then people start to sell it, and the buy orders start to go away. No one wants to buy anymore. You're going to end up dumping that, right? So you want to sell a coin when it's pumping, when it's good. Even if it goes up another 10%, you just realized all your gains, right? Versus if it starts to sell off and you didn't get out, you're going to have to try to sell it into these orders that aren't there, right? So take profit while it's there, sell in strength. Go out on vacation, and that's pretty much good.
And also, just be careful where you put your money, because all exchanges are not equal.
Exactly. I mean, there's exchanges that I would not move money to. You know, Cryptopia just had a big deal where they had their hack and this and that. I mean, the small exchanges with the small liquidity coins, they're not the same as the three that I mentioned. And so, again, I mentioned those three because I have money on them. I feel like I'm confident in having that money there. And there are certain exchanges, again, that I would never even move a quarter of a Bitcoin to. Okay?
Okay, so everything that we've talked about is general education on cryptocurrency, and we have two major products. The first product that we have, and Sammy Kendrick touched on it before, which is Crypto One. That's entry level for everyone else. Now, Corey's created something called Crypto Coach, which will actually give you much more detailed education and much more than we've managed to cram into 45 minutes here. So this is not something that you're going to get to understand properly here, but it is a product that Corey's come out with. Again, really quickly, just tell people exactly where we're up to with this and where they can go with it.
So again, you know, that PowerPoint that I've just kind of gone through, it's the same because it is a lot of information, but it really is all basic, and there's not really much that you can leave out. I mean, again, it's all really important for its own reason, but the market is constantly changing every single week, right? And so I do a weekly market review on Thursday. There's crypto coach students in the group. I can see their different faces, and so you know, every Thursday I'm doing this. Doesn't matter where I'm at in the world. Every week I'm doing this market review, and so it kind of helps people understand what's going on from the week to week. And you know, some weeks are red and some weeks are green, and so it's helping people manage their trades and those emotions from week to week and understanding why things are happening. I'm doing it all on TradingView with all the indicators. You know, I help people get that. I do an onboarding call. So in this onboarding call, I help you get your TradingView set up, all the indicators that I trade formatted. I mean, I'm leaving nothing out. Okay, all the secret sauce that I trade off of is on there, and I'm even opening up my heart on these different market reviews because I want people to know what's going on and why we're doing the things that we're doing. And so it's very personal. I'm again, Crypto Coach is what it's called now. Before it was called Crypto Mentor. When you're dealing with a lot of money, you know, it's easy to turn 20 grand into 100 grand in this cryptocurrency market as we do what we do. But it's also just as easy to turn that 20 grand into 2 grand if you don't know what you're doing. And so, you know, when you're dealing with that kind of money, you need more than just the copy and paste stuff. Again, you need real education. And so, you know, when I came out with Crypto One, I was putting out these alerts, and people are asking all these questions in my inbox constantly. There was a disconnect. There was a gap there that needed to be filled. And so that's where this product came into play. And I've been really happy with how it's developed over the last, 4 months or so. Some of the testimonials that are in the group, pretty phenomenal. And it's just going in the direction that I want it to. And I got websites coming out, and it's really becoming and will be a top-notch product across the whole crypto space.
Can I just sort of sum it up simply for
Absolutely,
people?
please.
When people are looking at this, when you're looking at this at the first instance, if you have a modest amount of money to start off with, no fortune to start off with, then Crypto One is the product for you.
Yep.
Crypto Coach is something that's going to take more capital to do that, so you need to have more available to invest. But if you do that and you want that deeper in education, then there's an amazing product there that's going to help you to make more money. But you do need to be aware that that's a bigger buy-in.
Yeah, no, absolutely.
Yeah.
So you get to that price point. So
Okay.
when I first launched this thing, it was $10,500 from the get-go. It was always going to be that price point. I launched at $3,500 for 2 reasons. One, I wanted to get students in and get testimonials in, right? And by them being able to save $7,000, that's $7,000 more that they can trade with, right? To get them that testimonial, right, for the products. Well, also, Bitcoin was really cheap, right? Bitcoin was about $3,500, so it was still a whole Bitcoin. And in my mind, a Bitcoin is worth at least 20 grand, right? So in my mind, I'm still kind of getting $20,000 at that cheaper price. Well, I made it very clear that after a month or two, the price would be going up to $5,500, and I was very stern on that hard date, and I went up to $5,500. Well, guys, that time is finally here for $10,500. On May 1st, it is a hard date. I am increasing this price to $10,500, and so this is a 12-month deal. It's 52 hours of market views. these students really get me in this chat. I mean, I'm answering questions all the time. They're in my DMs all the time. I mean, when you start to break up this from an hourly standpoint, I mean, right now I'm under, $500 a month right now. I know people are charging thousands of dollars a month for consulting, for what I'm doing right now. And so the great thing is a big distribution channel here, right? So I can do a little bit more discounted, but it's going up in a few days. So if you've ever wanted to get in crypto, coach, now is the time to do it. Save yourself $5,000, save yourself a whole Bitcoin in a sense, right? And so what that means, it's 24/7 again. So even at 10,000, I'm still under $1,000 a month on this deal. And so I say this because this is my product. Okay, it's kind of through Kavera, but I'm controlling it, and I will be going to 15,000, and then 20,000, and then 25,000. This thing is going to continue to go up because I got people who are making $20,000 in a day on this product. You know what I'm saying? So price is relative, right? What is expensive? That's it. How long is a stream? I talked about that earlier. So, I'm trying to figure out what the right price point on this thing is, and as long as I'm seeing the kind of money that people are making, I'm realizing that there's more to go on this thing. And as I get this website going on, and it doesn't mean just so much to it. So, I can say 24/7 consulting. Corey, 3 o'clock in the morning. What do I do with this coin? I'm freaking out right now. That's the kind of access you have to the Crypto One trader. Again, 1900% the bear run, thousands of percent last bull run, and this next bull run it's going to be thousands% again. So last one is the ICO, initial coin offering. This is a coin kind of like an IPO that's never been released to the trading exchanges yet. I'm not allowed to put these coins out to Crypto One because they're considered a security. And so with Crypto One, I'm also able to put these out where these gains are substantial. I bought Electronium at a penny, sold it at 10 cents, 10x on that. There's another one right now. I mean, it's pretty phenomenal. It's kind of taking a while for it to get the exchanges, but it's at 2 pennies right now, and I see this thing going to $1 or $2. And so there's just a lot that I can do with this product that I cannot do through Kavera because it's publicly traded, compliance stuff, and this is the one that really, again, I'm big on education, and I want to teach people, right? But it's just not cheap information, or it can be free.
So we're back again to saying this isn't an inexpensive product to start off with. It is an incredibly valuable product, and there's a lot of people in this room that are already buying into this product and using this right now.
And so I guess the last thing I'll say there too is there is a commission on that. So on a 5,000, I get $1,000. It's about 20%. Okay, it's outside the volume, the code, all that kind of stuff. Too confusing to have that in there, right? As I do move this price to 10,500, it will be $2,000 or something like that. I'm gonna keep it around this 20% that I've been doing, and same thing all the way up. As we do this. So again, I'm here to bring the information, to bring the content. I'm here to give back to the people who are bringing the students to me to where they have more money to trade with. It's still a network marketing kind of deal, right? There's still a referral thing there, and again, I want everyone to make a lot of money. But again, I need to have my time to be taken care of as well.
Things I want to touch on there, though.
Yeah.
So there's a commission that's available for you. If you introduce someone to this product, there is a commission.
Yep.
It doesn't attract any volume as far as Kavera is concerned.
No volume. It's simply
clarity on that.
one-shot bonus. If it's paid in PayPal USD to me, I pay in PayPal. If it's paid in Bitcoin, I pay in Bitcoin. Pretty much same day kind of deal. PayPal, you have to wait for things to deposit, but that Bitcoin is immediately. And so, yeah, that's what I was for.
Okay, so I
guess there was going to be something. So everyone who showed up today, okay, I'm going to do $1,000 off for if you want to do it today. So $4,500 instead of $5,000. I'll still pay out the full $1,000 commission for the people, whoever the upline is, because I brought the person today. And so I kind of said I need something special for you guys, and that's going to be for kind of like today, tomorrow only. If you can hop in. Come see me if you want to do it. If you need to move some funds around, do it tomorrow. But for people here today, save $1,000, and you're really kind of saving $6,000 in a sense, because again, just a few days, this thing's going to $10,000. So appreciate you guys all coming. Appreciate y'all letting me speak. I always love coming and talking about crypto and what it's done for me, what it can do for you guys. And again, some of the students that I see in here, I mean, I know what they've done with the product, and you can probably find them around. They can tell you their story, and it's going to be a great bull run over the next 12 months.
Fantastic.
Appreciate it, guys.
Corey. I really wish we had a bit more time to be able to go in more detail, because Corey has a ton of stuff that he wants to teach you, but we've got a ton of other things that we have to talk about again. So,
I
Corey,
appreciate your time, guys.
thanks for your time. We appreciate it.
Wow, ladies and gentlemen, please give it up one more time for Mr. Corey, Chadwick, and one more. Come on, guys. Right, guys, I know we're pushing a little bit of time. I know you want to go out, stretch your legs, or to the toilet, have a drink, whatever. Just let you know there are coffee, I believe. Is that right, Claire?
Yes.
Tea, coffee. Sorry? Okay, so for people that's ordered before we started the event, there was tea, coffee to yourselves. But I think if you go to the bar, it might be $2.50. Oh, yeah. I know. If you go to the bar, it's going to be £2.50. Guys, before we go, I'm going to introduce again Mr. Simon Brooks. So please give him a welcome for Simon Brooks.
I just want to cover a few points. I mean, crypto Corey, absolutely phenomenal. I don't know if you're sat there thinking, whoa, I don't really understand a word of what he said. Let me just put it in this picture. Have you ever had a migraine?
Yeah. Yes.
This is yes. This is no. This is I don't trust him yet. Yeah. Have you ever taken a Nurofen? Yes.
Yes.
Okay. Do you understand how the Nurofen works? No. Why did you take it? Because it got results. Now, anybody that's in Corey's Crypto Coach in the room, I know we've got. Where's Colin? Right, Colin. Okay, Colin, can you just stand for it? Can you just tell everybody your result? So, number one, tell people.